As long as price holds within the channel, structure remains valid, only a confirmed break below the lower band would signal weakness. Practical setup. Entry, buy when zigzag low appears near lower band. SL, below the swing low. TP1, midline. TP2, upper channel. Risk management, maximum 2 to 3% per trade. Bitcoin tends to overshoot channels due to volatility, so allow some buffer, channel plus ATR-based padding. 8. Applying the strategy to gold, ZUSD. Gold behaves differently, it's less volatile than crypto but very technical. The price channel plus zigzag method works exceptionally well because gold respects structure and reacts precisely to confluence zones. Example scenario. Daily chart, channel slightly upward rightward arrow bullish environment, rhythmic, respecting the channel boundaries yields highly consistent trades. 9. Interpreting false breakouts. Not every channel touch leads to reversal. Sometimes price breaks out with strong momentum. How to read it? If the breakout happens with volume and wide candles, it's likely a trend continuation. If it breaks slightly outside the channel and then snaps back inside, that's a fake out, often followed by a strong move in the opposite direction. Zigzag confirmation. Zigzag helps you differentiate. If a new zigzag leg forms outside the channel, the trend may be changing. If not, it's probably a fake move. 10. Risk management and psychology. A powerful system means nothing without disciplined risk control. The key to consistency isn't accuracy, it's risk consistency. Core principles. 1 to 3% risk per trade, never more. Stop loss always active. Partial profits at first target, trail stop for extended moves. Don't chase entries, let the setup come to your zone. Avoid overtrading, more trades don't mean more profit. Psychologically, this strategy rewards patience and pattern recognition. Waiting for perfect confluence, channel plus zigzag plus signal, builds confidence and avoids emotional trading. 11. Universal application, all pairs, all time frames. The beauty of this method lies in its universality. Works for Forex, crypto, commodities, indices. Effective on 1-minute scalps, 15-minute intraday, 4H swing, or daily positions. It adapts naturally to volatility because it's structure-based, not indicator-based. Whenever you open a new chart, draw or activate your price channel. Observe zigzag highs/lows. Identify whether price is near the upper or lower edge. Wait for confirmation, buy/sell signal. Plan your trade, rightward arrow, execute rightward arrow, manage rightward arrow, document. 12. Example trading workflow. Let's summarize the step-by-step workflow used by professional traders. Open chart of desired pair, example TCUSD 15m. Or silver or gold. Identify trend direction via channel slope. Locate last zigzag swing point. Mark confluence zones, lower/upper band plus swing point. Wait for signal, buy/sell. Confirm with market structure, break of last high/low. Plan risk to reward, minimum 1:2. Place order and manage trades systematically. Log trade and evaluate later. 13. Advanced techniques. A channel recalibration. As new highs/lows form, periodically adjust the channel boundaries to align with the latest zigzag points. This keeps the model dynamic and relevant. B. Multi-channel layering. Use 2 channels, one from a higher time frame, macro structure, and one from the current time frame, micro structure. When both align, the setup strength multiplies. C. Integrating with other tools. Volume profile, rightward arrow confirms strength of reactions near bands. Fibonacci retracements, rightward arrow add further precision to entries. RSI or MACD divergences, rightward arrow secondary filters for reversals. 14. Common mistakes to avoid. Entering before zigzag confirmation forms. Ignoring higher time frame trend direction. Trading inside the middle of the channel without confluence. Moving stop loss emotionally instead of strategically. Forgetting that no system wins 100% probabilities, not guarantees. 15. The mindset of a channel trader. Success in trading the system requires a methodical mindset. You are not predicting, you are reacting. You respect the geometry of price. You understand that losses are part of the data, not personal failures. Over time, as you practice the system, you'll begin to see the market flow naturally. The channel becomes your map, zigzag your compass, and your emotions your only real enemy. 16. Summary of core rules. Condition confirmation action stop loss target. Price near lower band plus zigzag low plus buy signal upward channel buy below zigzag low midline rightward arrow upper band. Price near upper band plus zigzag high plus sell signal downward channel sell above zigzag high midline rightward arrow lower band. Channel flat sideways range trading only opposite band. Price breaks channel plus new zigzag leg trend shift wait for retest. 17. Final thoughts. Trading is about pattern recognition and discipline. The combination of the price channel, zigzag, and buy/sell signals gives you a high probability framework to identify clean entries, manage risk, and follow structure with confidence. Applied correctly, this approach works seamlessly across all markets and all time frames from fast-moving crypto like TCUSD to steady instruments like gold, ZOZD. When mastered, this system turns chaos into clarity, transforming the market's randomness into readable rhythm, a true edge for any disciplined trader. TCUSD Deep Trading Analysis, Price Channel Strategy. Welcome everyone to this comprehensive and detailed analysis session on Bitcoin and also on gold versus the US dollar, TCUSD. Today, we'll be focusing on how to read, understand, and utilize the power of the price channel indicator in combination with other market confirmation tools such as the zigzag structure, swing highs and swing lows, and buy/sell signals that appear across multiple time frames. The purpose of this analysis is not only to interpret what is happening on the chart right now but also to deeply understand how the indicator behaves, how it filters market noise, and how traders can make better and more consistent decisions using the visual cues that this tool provides. Let's begin with the foundation, the price channel. The price channel is constructed based on support and resistance levels, dynamically plotted as price evolves over time. When we see a bullish channel, meaning that the upper band and lower band are sloping upwards, it tells us that the overall market structure is trending positively. This is where buy positions become more favorable, especially when confirmed by a zigzag low and a buy signal generated below the midline of the channel. The zigzag indicator, in this case, acts as a filter. It helps us identify the key turning points, the swing highs and the swing lows that structure the rhythm of the market. When a zigzag low forms near the lower channel band, and the price begins to climb, this becomes a zone of high confluence. If, at the same moment, a green buy label appears, that is the market telling us that the confluence between trend direction, support, and pattern reversal is aligning. When analyzing TCUSD and also ZOZD gold on the 15-minute time frame, we notice how the market oscillates within the price channel. The upward and downward movements between the red and blue zones visualize market cycles of accumulation and distribution. These patterns repeat themselves consistently, giving us multiple opportunities throughout the day to identify trades that align with the dominant trend. One critical aspect of this strategy is not to react emotionally to every signal but to wait for confirmation. For instance, when the channel is bullish but price temporarily dips into the lower half, inexperienced traders often panic. However, when using this indicator correctly, those dips represent potential buying opportunities. especially when the zigzag identifies a new higher low and the channel direction remains intact. ZA's Deep Trading Analysis, Price Channel Strategy. Welcome everyone to this in-depth and extended analysis on gold. Also can be used for others such as Bitcoin versus the US dollar, ZA's. In today's session, we are going to explore how to interpret the behavior of gold through the lens of the price channel indicator. Combined with zigzag confirmation, swing high and swing low structures, and the recurring buy and sell signals that help identify momentum reversals and trend continuation patterns across all time frames. The price channel indicator on gold is a highly dynamic visual framework that evolves as the market develops new data. Because gold tends to be one of the most technically reactive assets, the indicator serves as both a guide and a confirmation tool. Its ability to represent support and resistance in a flowing manner allows traders to align themselves with the dominant direction of the market while managing the natural fluctuations of volatility. When the channel slopes upward, we categorize the trend as bullish. Price action in this environment tends to respect the lower boundary of the channel as dynamic support. Every touch and rejection near this zone represents a potential buy opportunity, particularly when the zigzag indicator plots a swing low at or near that same boundary. The moment a green buy signal appears, the confluence between the upward sloping channel, the swing low structure, and the signal confirmation reinforces a strong long bias. In bearish conditions, the logic reverses. The upper channel line acts as dynamic resistance, and each rejection near it, especially when accompanied by a red sell signal and a zigzag swing high, becomes a point of potential entry for short positions. The beauty of this system is that it adapts to volatility and keeps the trader visually aware of market flow without emotional bias. Gold is particularly sensitive to global fundamentals such as inflation data, central bank policy decisions, and risk sentiment shifts. This creates large impulsive moves that can appear chaotic to the untrained eye. However, the price channel indicator absorbs this chaos and redefines it as structured movement. The upper and lower bands effectively translate uncertainty into readable boundaries. Let's examine how this plays out on the 15-minute time frame. In this setup, gold often oscillates between the upper and lower zones of the channel multiple times within a session. When the price is trending upward and remains within the top half of the channel, momentum is healthy. When it dips below the midpoint but remains above the lower band, we interpret it as a correction within an ongoing bullish trend. Patience during these corrections is key. Traders who rush to sell often find themselves caught against the trend once the next zigzag low and green signal appear. The midline of the channel represents the equilibrium of price where buying and selling forces are balanced. When gold trades above it, the bullish energy dominates; below it, bearish energy prevails. Watching how price behaves around this midline can often reveal the upcoming direction before any signal even appears. For example, a strong bounce from the midline followed by a bullish engulfing candle is a pre-confirmation of trend resumption. The zigzag indicator acts as the structural backbone of this strategy. Each plotted swing reflects a meaningful shift in market direction. A series of higher highs and higher lows signals continuation, while lower highs and lower lows indicate reversal. When we overlay these zigzag points onto the price channel, we gain context whether the swings are developing inside the boundaries, breaking them, or rejecting them. One of the most consistent high probability scenarios occurs when gold prints a zigzag swing low exactly at the lower boundary of a rising channel. This is not random, it's a point of intersection between structure, support, and momentum. When a green buy signal appears here, it's a visual alert that smart money may be stepping back in. Similarly, when a swing high forms at the top of a descending channel and the system prints a red sell signal, That alignment suggests exhaustion of upward momentum. Trading gold effectively with this method requires understanding how price reacts to the channel edges. During strong impulsive rallies, price may temporarily break above the upper boundary. Rather than chasing such moves, professional traders wait for a pullback into the channel. This is called the re-entry zone. Once price retests the upper band as new support and confirms with a zigzag low or bullish candle, the next wave usually follows, often stronger than the last. Across higher time frames such as the H1, H4, and daily, the same logic applies but with broader implications. The slope of the price channel becomes the macro guide. When the daily channel slopes upward, even intraday pullbacks on the 15m or 1H charts become buying opportunities within the larger uptrend. This is called multi-time frame alignment, and it's one of the most effective techniques for consistent results. Gold's liquidity and volatility mean that multiple swing setups occur daily. By following the rhythm of the price channel, traders can filter out noise and focus on quality signals. The zigzag indicator ensures that every swing identified represents a meaningful change, rather than a random candle fluctuation. This balance between flexibility and precision is what makes the combination so powerful. Now let's explore the concept of confirmation layers. Before taking a position, it's essential to see multiple confirmations aligning. One channel direction matches the trade bias. 2. Zigzag prints a confirming swing point in that direction. 3. The signal indicator displays a matching buy or sell label. 4. The candle pattern supports the entry, engulfing, pin bar, or rejection. 5. Price interacts with a known structural level, support/resistance or midline. When 3 or more of these align, probability significantly increases. Risk management is the backbone of all trading. Even with perfect confirmations, market anomalies occur. A disciplined trader sets a stop loss below the last swing low in an uptrend or above the last swing high in a downtrend. This approach not only preserves capital but also ensures emotional control during unexpected market spikes. Remember, consistency is built not by winning every trade but by protecting every decision. The channel system also highlights momentum shifts early. When the slope begins to flatten, and price starts hovering around the midline without commitment, it's often a prelude to consolidation. During such periods, trade frequency should decrease, and focus should shift toward identifying breakout potential. Once the channel resumes a directional slope, the next trend wave begins. Understanding gold's behavior during news events is crucial. For instance, non-farm payrolls, or CPI releases, often trigger temporary spikes. The price channel visualizes how far these spikes deviate from equilibrium. A quick wick outside the boundary followed by a return inside the channel indicates a false breakout, an excellent opportunity for reversal entries when confirmed by zigzag and signal alignment. On larger scales, gold respects macro-technical zones derived from previous swing highs and lows. The zigzag indicator automatically plots these turning points, helping traders visualize the story of price evolution. When these levels coincide with the channel boundaries, they act as magnets. Areas where liquidity pools exist and reversals frequently form. In bullish conditions, one can observe gold creating stair-step patterns within the channel, each pullback forming a higher low, each rally forming a higher high. Traders can scale in at each retracement confirmed by the zigzag and buy signal combination. Conversely, in a bearish channel, each rally that fails to break above the midline becomes an opportunity to sell the lower high. This system also adapts beautifully to scalping or swing trading. On lower time frames, 1m, 5m, it provides rapid signals for short-term moves, while on H4 or daily, it defines long-term trend direction. The principle remains constant, the market breathes in waves, and the channel maps those waves visually. Beyond technical analysis, the psychological element remains key. Gold often tempts traders with sharp, sudden spikes. The indicator's structured view prevents emotional overreaction. By waiting for confirmation instead of impulse entries, traders maintain composure and clarity essential traits in long-term success. When traders master the interpretation of this indicator, they gain not only signal accuracy but also time awareness. The rhythm of the channel combined with the measured timing of zigzag swings teaches patience. It reminds the trader that price needs time to develop structure. Acting too early disrupts synchronization with the market's natural flow. To summarize the golden principles of this method: trade in the direction of the channel slope. Confirm entries with zigzag swings and signal colors. Use the midline to judge momentum strength. Align multiple time frames for precision. Apply disciplined risk management always. In essence, the price channel is not just an indicator, it's a framework for market structure, discipline, and timing. Whether the trend is bullish or bearish, the logic remains the same. Wait for confluence, confirm with structure, and execute with patience. Gold's behavior is cyclical and rhythmic, just like any financial instrument. The price channel visualizes that rhythm, turning uncertainty into a readable map. By mastering this approach, you don't just follow price, you understand it. And that's what separates observation from mastery. Welcome everyone to this in-depth and extended analysis on gold versus the US dollar, ZUSD. In today's session, we are going to explore how to interpret the behavior of gold through the lens of the price channel indicator. Combined with zigzag confirmation, swing high and swing low structures, and the recurring buy and sell signals that help identify